Oil is important because I have to make my eggs in the morning. Okay, jokes aside, oil is not just a resource, it's leverage, the kind of substance that doesn't just power machines. It quietly decides which nations move freely and which ones negotiate under pressure. At its core, oil is stored ancient sunlight compressed into liquid from over millions of years. But in the modern world, that poetic origin doesn't matter. What matters is this: nothing moves without oil. Planes don't lift, ships don't cross oceans, armies don't mobilize, factories don't run, and entire economies flow into silence without a steady flow of it. So, whoever controls it, or even just influences its flow, doesn't just participate in the global system, they reshape it. There's something almost uncomfortable about how invisible its power is. Oil doesn't announce itself like gold or cryptocurrency. It hides in logistics, shipping routes, the price of bread, and fuel. And yet, when it tightens, when supply dips or politics interferes, the world suddenly remembers it's there. Inflation spikes, governments panic, alliances shift, and the system starts revealing itself. Oil turns geography into strategy. Deserts become valuable, choke points like the Strait of Hormuz become pressure points, countries that were once overlooked become central nodes in global survival. And countries that feel powerful discover quickly that power is conditional. But here's the quieter truth most people miss: oil is not just powerful on its own, it's powerful because humanity built modern civilization around it. We didn't use it, we designed the world to depend on it. If it impacts civilization, then it definitely impacts FX markets. Currencies are not just money, they are claims on energy, trade, and production. Oil is the bloodstream of that system. So when oil moves, it doesn't stay in its lane. It leaks into currencies that depend on it. Some currencies are tied directly to that flow: the Canadian dollar, the Norwegian krone, and Russian ruble. These are not just national currencies. They are partially oil proxies wearing a Forex disguise. When oil rises, these currencies often breathe easier. When it falls, they tighten. But the real mechanism is colder. Oil is priced in USD. That one fact turns everything into a feedback loop. When oil rises, all exporting countries earn more dollars. They convert those dollars into local currency, and their currencies strengthen. When oil collapses, the dollar comes back home, demand dries up elsewhere, and those same currencies weaken. So oil doesn't just affect FX, it redistributes pressure across the entire system. And then there's inflation, the silent middle layer. Higher oil prices don't just stay in energy charts. They bleed into transport, manufacturing, and food. That inflation forces central banks to respond, and central banks are the true gods of FX. Interest rates rise, currency strengthens. Interest rates fall, currency weakens. So oil is indirectly whispering into central bank decisions, not loudly, not openly, just enough to tilt expectations. There's something almost psychological about it. Traders think they are watching charts, but underneath, they are often trading energy anxiety.